Billionaire traders are the richest traders in the world who earned from trade assets more than $1 billion. The most famous billionaire traders are George Soros, Carl Icahn, Ray Dalio, David Tepper, and James Simmons. Investors and active traders are different notions because investors are looking for a larger return over an extended period through buying and holding. Active traders take advantage of rising and falling markets to enter and exit positions over a shorter time frame, taking smaller, more frequent profits. The top 10 richest investors in the world are Warren Buffett, Michael Bloomberg, George Soros, Carl Icahn, Joseph Safra, Thomas Peterffy, James Siphon, Ray Dalio, Abigail Johnson, and Steve Cohen.
Hi, we're on Forbes.com website, and right now we're trying to see the top billionaire traders. They trade forex, stocks, commodities, everything. Hedge funds usually trade various assets, and right now we can see that on the 67th place and most richest people in the world is Jim Simmons. He has $24.6 billion and he's 83 years old. The next below him is Ray Dalio, 20.3 billions. Then Ken Griffin, 16 billions. Steve Cohen, 60 billions. Etc. etc. As you can see, there is a David Tepper, Michael Platt, George Soros, David Shaw, Paul Tudor Jones, etc. This is the real-time Forbes.com results. Of course, they change every single day, every single month, but this is the approximation of the most richest people, richest billionaires in trading industry right now. A minute ago, we saw top richest billionaires in the world, but we didn't talk about Warren Buffett. Buffett has been the chairman of the largest shareholder of Berkshire Hathaway since 1970. And this is not hedge fund company. Because of that, he wasn't on the list, but he's one of the top traders ever. He's not forex trader, he's equity trader, but nevertheless, Warren Buffett, George Soros, Jim Simmons, these three persons need a little bit more attention than others because they're very interesting, because of three different trading styles and trading philosophy, but they're richest and the most successful in their area. Let me start with Warren Buffett. Look this. This is the Berkshire Hathaway, 50 years. This company and all information about everything on this chart, but I don't want to discuss related to this chart. We can see it's a progression. And it's not some crazy progression, some crazy spike, something like that. No, you can see 20% average annual increase every single year. And because of that, this company is so strong, is so huge. What I want to tell you about the school of trading. Buffett follows the Benjamin Graham School of Value Investing, which looks for securities whose price are adjustable low based on their intrinsic worth. So rather than focus supply and demand on the stock market, Buffett looks at companies as whole. So this company picks couple stocks, not hundreds, not 50, not like some strong diversification. No, just couple stocks, invest in them and try to create the fortune. Of course, you need to little bit sell and buy, a little bit sell and buy. It's not just a buy and hold principle. You just need to follow some rules, to pick the right companies, to invest in right companies in the right time. So this company do this value investing in the best way. What I want to tell that is there is one quote that I like. Only buy something that you will be perfectly happy to hold if the market shut down for 10 years. And this analysis can be used in any kind of trading, even the forex trading. Long positions and some projections, the long-term projections are very good. Of course, forex market fluctuate around two levels for a couple of years, and it's not like a stock market. But generally, if you trade Forex, for example, you need to watch daily and weekly chart, because if you just trade in some short time frame, it's not good. You need very often to, you will see on the end that the best positions and the long-term positions in trading. And I think a lot of people follow this rule and follow this philosophy. The next person that I want to talk about is George Soros. I like this quote: if investing is entertaining, if you are having fun, you're probably not making any money. Good investing is boring. And like Warren Buffett, George Soros has similar philosophy in this quote. But this trading style is completely different. George Soros is much interested than Warren Buffett when you talk about trading style and trading philosophy. As we know, he made a bet against the British pound and created a fortune $1 billion in one day. After this, he got famous as the man who broke the Bank of England. He also made a history for creating such a huge amount in just one day. And it's very interesting. He runs the firm and is founding member of Soros Fund Management and hedge fund managing firm. Interesting about George Soros is that his trading style is very interesting when we talk about Forex market. I read his book, and his hedge fund is known for its global macro strategy and trading style centered around marketing large bets on the movement of currencies, commodity prices, stocks, bonds, everything. But everything is based on the macroeconomic analysis. The first thing that when I talk about trading style of George Soros is when he sees some kind of stupid intervention from the government in currency industry, for example. He's ready to bet against that. The same thing was in the 90s when he crushed Bank of England because it was a stupid decision to defend some price. And the same thing 10 years ago when he bet against Japanese yen, and because he saw some kind of stupid intervention from the Japanese government. The both examples show how his macroeconomic analysis and very clear, very simple, and a lot of other traders didn't try something like he. The same thing is the stock industry. Like companies often exhibit irrational behaviors. For example, taking on more loans to fund risky projects. When he saw that, he then reacts and create money. When we talk about his trading style, Soros used reflexivity as the cornerstone of his investment strategy. It's a unique method that values assets by relying on market feedback, how the rest of the market is valuing assets. It's for me, in my opinion, it's an advantage level at value investing. And Soros uses reflexivity to predict market bubbles and other market opportunities. The other thing important for George Soros' way of thinking is that the Soros base his market moves on the scientific method. He creating a strategy that will transpire the financial markets based on current market data. Soros will test his theory with a smaller investment first in the beginning, and then broadens his investment if the theory proves positive. And this is the remarkable. He just start little by little, test, and then build position, huge position, and then crush the market. This is the really interesting way of trading. What is the thing is, he said in his book, Soros also listens to his body when making investment decisions. For example, if he feels a headache, um, sometimes this is the just enough proof that stop with some move, because he feels that it's not good. This is maybe the joke, but the next thing is blending political acumen with investment acumen. And he talked a lot about 1992, and when he was against the UK government and decision to hike interest rates. This set off the trigger effect, devaluing the British pound and sending stocks higher after the devaluation. And that move earned Soros 1 billion, along with the famous moniker as the man who broke the Bank of England. And effectively, Soros went short a position in the British pound worth 10 billion and earned 1 billion as the British currency slide because of political, economical turmoil linked to policy of higher interest rates. And this is the like I said, that strategy based on stupid government intervention. This is it, blending political acumen with investment acumen. And on the end, Soros uses a handful of advisors to make big investment decisions, and he has a team of analysts, and making sure to review at least one contrary view of his strategy. Soros says that need time to read and reflect before pulling the trigger. And this is another thing interesting for George Soros. The next person that I want to talk about, this is the completely different strategy, is Jim Simons, as a pattern recognition master and the pioneer of the quant investing. He said, we search for historical data, looking for anomalous patterns that we would not expect to occur at random. This is some basic idea how he created the Renaissance hedge fund and changed the world of trading. As we know, he was a mathematician, and today he's mathematician. Of course, this is the his primary skill, and he's so devoted. And we know that he taught mathematics at the Massachusetts Institute of Technology and Harvard University, and joined the faculty of the Stony Brook University. And from the 1968 to 1978, he was appointed the chairman of the math department there. And what is the interesting, for more than 2 decades, Simons' Renaissance Technologies hedge funds, which trade in markets around the world, have employed mathematical models to analyze and execute trades, many of them automated. Renaissance used computer-based models to predict price changes in financial instruments. These models are based on analyzing as much data as can be gathered, then look for non-random movements to predict prediction. Medallion, the main fund which is close to outside investors, has earned over the 100 billion in trading profits since inception in 1988. This translates to 66.1 gross return, or almost 40% average net return between 1988 and 2018. Renaissance employs specialists with non-financial backgrounds, including mathematicians, physicists, signal processing experts, statisticians, and so on. This firm's latest fund in the Renaissance Institutional Equities, and this firm today is better known than Medallion Fund, a separate fund that contains only the personal money of the firm's executives. So there is 3 things and the 3 main points when talk about Jim Simons. The first one, that quant funds makes investment decisions based on the use of advanced quantitative analysis, and that quant approach is very important and can be used in trading. The second thing, that managers utilize algorithms and custom-built computer models to pick their investment. This is the second thing. And the last, investors are turning to and seeking with quantitative analysis with funds because of the rising availability of the market data. So, historical data are very important. This is the only thing that we have. And using historical data, we can try to predict the future. It's very tough. It's not easy. Everybody does that. Huge competition, but this is the only thing that we have. So this approach I like G. Simmons, but it would be wonderful if you as a trader can follow Warren Buffett, George Soros, and Jim Simmons at the same time. Why not? You can have couple accounts. In one you can trade using value investing. In the second one you can build some long positions using some macroeconomics details and so on. And in the last account you can use short time trading using systems, expert advisors, something similar as Jim Simmons can do. So this is it. Let me go further. Right now we're watching racing bars of top investors in this world. Of course, this is investors from United States of America, and we can see that their fortune every single year and every single month is bigger and bigger. It is because this period of last 10 years was the period after the market crash, and after that we can see the huge bullish trend for top equities. Of course, 500 top companies and United States of America had remarkable result in last 10 years, and all these traders had extraordinary performance. But the thing that we can see is the George Soros and Ray Dalio. But of course, George Soros had excellent performance. In 2011, he had, I think, 81 years, and he told in that moment that he wanted to retire, and he started some home office and everything, but he was actually had one excellent trade. I think into 2011. It was a trade against Japanese yen. He traded US dollar, Japanese yen, and he noticed one very bad decision from Japanese government related to Japanese yen, and he hated inventions in the market. And when he saw some kind of artificial intervention, he liked to bet against that currency. The same thing he did in the 90s against British pound, and again in 2011, I think, against Japanese yen. And those years was very excellent for George Soros. And as we can see, in 2015 and 2016, he was the leader of the top perform traders and hedge fund investors. What I want to tell that we cannot forget Jim Simmons. Jim Simmons is hedge fund chairman of the Renaissance Technologies, and what is the important thing? I think in the same year he decided to retire as same as George Soros. Of course, the both of them were some kind of the leaders of the company. They didn't work as executive hedge fund officers. They just were on the top of the company, and like I said, 9 decades of their life, and they decided to slow down. And we can see in 2018 the huge switch between George Soros and other traders, and Jim Simmons had a remarkable year. This remarkable year for Jim Simmons was not just remarkable year for him. It was the remarkable decade for whole world. As we can see on this chart, interactive chart, where GDP per capita is presented, we can see from the 60s till now, huge GDP per capita progression. Look just this big blue circle. It is China. In the last 30 years, just watch GDP per capita of this country. Just watch this. Of course, this green circle is United States of America, and they were top all the time, and of course GDP per capita increased every single year. But India, China, and the whole world, they had excellent performance, and especially in the last 10 years. So all these famous billionaire traders, United States of America, they had excellent performance, not just because excellent trading strategy, a lot of capital, and so on. It is one more thing. The whole economy of the whole world, and especially for United States of America, is in the rising period. And this is the huge thing. For the end of this talk, I just want to give you one example from Warren Buffett. He said that not just his strategy, his knowledge helped him before to achieve this excellent performance, except that one important fact was important for him, because he just gave example. What if he was born in India or China or some other country 50 or 40 years ago? This performance is not possible in some other country, because America, American investors, American economy, it's very important for success of every billionaire trader in the United States of America. So this is it. I wish you good day and bye-bye.